kind of this game of strategic poker going back and forth. And the punchline here is that when they got down to brass tacks and found out what each other was actually doing, and because they gave enough secrets to where they're like, wait a minute, you're not doing that EM trade with Brazil and Thailand, are you? And Steve goes, yeah. And Jim says, well, that's what I'm doing. It's, it was really funny that they just, they had no idea that anyone else knew, let alone Jim knows that Steve's doing it, and Steve knows that Jim's doing it right before, they're about to do a show on Bloomberg and CBC. So it's kind of a funny deal there. But that just goes to show you that Jim Rogers, look, if there's money to be made in an arbitrage between, the Brazilian real and the Thai baht or whatever, the currencies, then he's going to jump on board. And it's not just, investing in North Korea or Venezuela or wherever no one wants to go. He's got a lot of tools in the toolkit, that's for sure. And that's one of the reasons why I've kind of changed up a little bit what I'm doing with Rebel Capitalist Pro, in the sense that I'm trying to do more of those things instead of just sitting back and waiting for Black Friday like I did during the cerveza sickness. I mean, that's fine and dandy, and I think that's a really smart way to approach things. But I also think that you need to develop those other muscles. It's like going to the gym and just doing chest. Okay, that's fine, but we want to do shoulders sometimes. We want to do biceps. We want to do legs. We want to do squats. We want to do glutes. And, now that said, when I'm doing these trades and I'm trying to exercise those muscles, trying to put more tools in the bag, I'm not doing it with a lot of money. I mean, I'm doing, maybe 1% of the portfolio or 2%, 3%, something like that. So I'm not taking these huge bets because I know that I'm a beginner and I'm trying to figure this stuff out. And as I figure it out more and more and more, then I'll put more chips on the table, let's say. So, I've made a ton of money on that 10-80-10 portfolio, but that was because I'm just buying at the right times, whether it was, you could look at the 10-80-10 portfolio, and it's pretty much what I did when I went into real estate in 2012. It is like 80% of the portfolio was real estate, almost more, paying you to own it. That's an investment. And then Cyprus, when I did that, back when they had their big crash, the bail-in, remember that? Did the exact same thing there. And then the same thing with the cerveza sickness. Same thing there. Just back up the brinks when everyone's running for the hills. And then in the interim, try to do these other trades, if you will, where you see opportunity. And right now, I think we're in a time in the cycle where the opportunity really lies in more trades and less kind of long-term, just buy massive deep value. Okay. Hey, George, when you refer to Marty Zweig's rule number 1, the trend is your friend, don't fight the tape. Generally speaking, what time period chart? I look at like a 1-year chart, usually. What would you default? Yeah, 1 year. Obviously, every stock ETF ticker, unique situation. But as I try to implement Marty's rule number 1, I'm curious. Yeah. And then what I do is I just, higher highs, higher lows, and then lower lows and lower highs. So I try not to get too cute. But let's go over to a chart of silver because I know that's on everyone's mind. And I just took a position in silver. I did a trade alert there. I'm down on the position. But the reason I did it is because we kind of broke above this high. And I still think you got some momentum there. I don't know that the fundamentals, it's not about debt and deficits. I said that last time. You guys know my position there. So it's more so about just kind of hot money going into silver, which it usually does in these cycles. And it broke above there. It looked like a strong candlestick, but then it just went straight down. I was going to sell the position if it got below this, but it didn't. It bounced, and now we're back up here. So it'll be interesting to see how this next week plays out. It'd be nice if we get some big up days here, but we'll see. We'll see. Again, if it breaks down below, 24, that's when I'm out. Not a real long-term deal here. And I think someone asked about the gold silver ratio. That's another reason why I'd be bearish silver, to be honest. Oh, I'm sorry, but looking at this chart. So I'm looking at a 1-year chart right here, and you can see now let me say Hugh likes to look at all-time charts. So what Hugh would be looking at is right here, how you had that break. That especially, I mean, look at you're look. This is a what a third 14 year, 13 year, 14 year, um, kind of almost bear market, you could call it. And then you're breaking above a high that was set 14 years ago. Hugh would be all over this. I've spoken to him many times, and he's always told me that these are his favorite charts, the super, super long term charts where, like, it for 20 years, it's been beneath the previous high and all of a sudden breaks above that. And that's where we are with silver right now. So I would guess, I haven't talked to Hugh in about a month or so, maybe a month and a half, but I would be very surprised if Hugh did not have a position in silver right now. If he doesn't, I'd love to get his rationale, because this is the setup he loves. But I going back to your question, I'm looking at a 1 year chart here, and we'll see how this kind of plays out. But if we break down below here and it kind of bounces, then I'm out, because that would be for me like a broken trend. I was very close to selling the other day, and I just kind of stuck to my guns, and we'll see if that was a good move. Here, George, what do you think about nickel? It had a rally in 2022, but now back to around the same lows. Yeah, I mean, same thing with nickel. It's just really kind of dependent upon the economy. And another thing we've got to look at is commodities versus precious metals, because it's easy to think of, oh my gosh, reflation, inflation, 1970s, money printing, debt deficits. I know that's what most people's narrative is, but that doesn't make any sense. It makes sense when you just look at gold and silver, kind of, not to me, but for most people. But then you got to look at all commodities. And to your point, look at nickel. I mean, if this was all about debt and deficits and money printing, would nickel be at all time low? Would oil be sub 60? I mean, probably not. I think maybe copper might be up there with I'm sure not with silver, but might be. Actually, let's look. Let me not just guess. Yeah, copper's high. Copper's high. So you've got mixed signals, right? You've got gold, silver, copper saying one thing, and then you've got the rest of the commodity space saying something completely different. And so I just, for me, this is telling you more about the economy than this. What I'm doing, if you can't see that, I'm looking at the metals. The metals doesn't tell me much about the economy. I know Dr. Copper, I get it, but overall, this tells me less about the economy. In other words, precious metals or the metals tell me less about the economy than energy. The economy is energy. Energy is the economy. We all know that.